Well, you will see more and more the insurance companies get back in. Some of the banks will be back in. What you're seeing right now is a lot of some of the old CMBS or securitized firms have kept some of their people. They've formed funds, or they're trying to originate mortgages using the TALF program to hope to ignite CMBS lending. We'll see if that'll happen. One deal's closed yet. You have some mortgage REITs that are being formed. But ultimately, I personally think CMBS will be back, probably in a different form. I can tell you we've completed one equity transaction this year. First of all, as far as new development, not many equity sources want to do any development at all right now. And then you're looking at basically existing properties. The old value-added play that we all were financing a couple years back, there doesn't seem to be a lot of interest in those these days from the equity partners. It's mostly they want stabilized assets, but they want stabilized assets where they can get returns in that minimum, the high teens to above 20%. It's just difficult to find those transactions, something that Larry alluded to early on. The disconnect between bid and ask, between buyers and sellers, is still there. There's a lot of equity money on the sidelines waiting, hoping that the sellers, and in particular the institutional sellers that have taken back properties, someday decide to sell instead of extend and pretend. So I think there's a lot of money there, but not a lot of it's getting placed. Much more conservative, much more simplified. And somebody will come up with another form of capital. And maybe it's the mortgage REITs, their rates will come down, or these opportunity funds, their rates will come down, because right now they're not competitive. But at some point, if they're not getting their money out, hopefully that brings their rates down, and we can start doing some deals with them.